Hello and good morning. You're watching the Business News brought to you by Blytheweigh. I'm Charlie Gibson. Now, as we all know, with any smaller stock, any of the junior stocks out there, price momentum is an incredibly important thing. It's particularly important if that price momentum is connected and associated with a news event as well. And one such stock where we've had exactly this sort of situation over the past week is European Metals Holdings. Now, the stock opened the week trading in London at about 22 pence. There was an announcement on the Tuesday and it went up to all of about 28 pence. To give it its due, it has given a little bit of that up, but nonetheless, joining me all the way from Australia is the company's managing director, Keith Coughlan. Keith, very good morning to you. Good morning for us, obviously, not good morning for you. Good evening to you, I suppose I should say. Could you just tell us a little bit about the announcement on Tuesday and how you see it, what it means for you going forward?
Certainly, Charlie, I can. Look, I think the backdrop to this is if you look at the lithium sector over the last few years, it's been a very interesting sector. And that we had a couple of years ago a very strong run in the lithium price, strong run in the stock prices of lithium companies. Things got a little bit more subdued then, but people have still been out there trying to develop lithium projects and bring product to market. Still some discussion over what's going to happen with the supply-demand equation going forward. But what we have seen in the last year or so is less supply coming to the market than has perhaps been anticipated. One of the reasons for this is the lack of funding for these sorts of projects. Lithium is a slightly unique metal. It's not LME traded, all of those sorts of things. And it's very, very important to have strong strategic and financial partners to develop any project. So we've been out there looking for people who fit this category for the last, most of the last year. And the announcement that you saw on Tuesday of this week is really the culmination of those discussions. We are in the early stages of a partnership with a very large Czech-based company called CEZ. They are the Czech power utility, which fits very nicely with what we're trying to do. That is, they provide good power to the Czech Republic. They have previously mined coal to power those power stations, and as is happening in this part of the world and a lot of other parts in the world, there is a movement away from coal, a movement towards renewable energy. CEZ are very much at the forefront of that movement in this part of the world, very much looking to renewable energy going forward. And obviously with renewable energy, you need power storage. You need batteries to store the energy that you generate through your renewables. So CEZ is a very logical partner for us. They obviously know the Czech scene intimately, they know the power scene there very well, and they are looking to expand into the area of providing charging stations for electric vehicles. And that's why they are a perfect partner for us. So we've been in discussion with them for a little while now about becoming a significant shareholder of our company and our co-development partner. They're undertaking a formal due diligence with that end in mind. And in the interim, they've provided us with a small financing that allows us to keep going with the project to do the things we need to do while they're conducting their due diligence.
I'd like to come back to the financing in a minute, if I may, but just on this issue of grid storage, I think it would be fair to say that orthodox wisdom has been up until now that grid storage would probably be provided by sort of vanadium redox flow battery type technology, whereas lithium was touted more for its properties actually in batteries themselves. So it would be supposed that lithium would power the batteries that would power the cars. You're talking about using lithium in a slightly different way then as grid storage for renewable energy. Do you think that orthodoxy is correct?
Well, I think the jury is probably still out, to be fair. Certainly lithium has a distinct advantage from a weight perspective, and so anything that's portable, it's very hard to see lithium being replaced or lithium-ion batteries being replaced with some other battery technology. And obviously when we talk about portability, from our mobile phones to electric vehicles, electric buses, electric trucks and boats and aeroplanes eventually, But we saw quite a change in the thinking in this respect last year when Tesla built the world's largest battery here in Australia, in South Australia, to augment the grid power down there because there'd been substantial problems with outages and what have you. Tesla stepped up. It was a world first. 50 million US, I think, was spent on that battery, and it was triggered not long after it was completed. It performed impeccably, and I think that's tipped the scales a little bit in favour of lithium-ion batteries for power storage on the grid and for charging stations for EVs. The other thing that's happening is because so many resources are being thrown behind the development of lithium-ion batteries, we're seeing a reduction in the costs per kilowatt hour. We're seeing improvements in the batteries, and all of that, I think, becomes self-fulfilling, such that if lithium-ion batteries become the norm, then it's very, very hard for them to be displaced.
So if all goes well, and CEZ rolls out an integrated sort of power utility come power storage sort of system in the Czech Republic, how much of their lithium requirements would you be able to supply?
Well, that's an unknown point at this time. Certainly we couldn't supply everything they would need on our current business plan. And if you look at forgetting grid storage for the moment, look to the plans of the car makers in this part of the world. Volkswagen, for example, the leading car maker in Europe, and that with the greatest aspirations to building EVs. Volkswagen are talking about building 3 million EVs in 2025. Now, on the most conservative estimate, that's about 120,000 tonnes per annum lithium carbonate equivalent versus a total production in the world last year of 280,000 tonnes, to give you some idea of the perspective. We couldn't get anywhere near producing that amount, whatever we did, and we have the largest lithium project, the largest lithium resource in Europe. We still couldn't get anywhere near satisfying that level of demand.
So in that sense, you would have to be part of a larger solution.
Certainly, if you look at the public information from Volkswagen specifically, because we're talking about them and they are the leader in Europe, they have developed a strategy to source lithium ion batteries from a number of different sources. They have contracts with some of the major, predominantly Korean companies, also one of the big Chinese companies, but they've also backed Northvolt, which is the startup, the very big European startup to make lithium-ion batteries, and they have publicly stated aspirations to build their own battery factories. So I think this is indicative of the fact that they and others in this space are looking for numerous components to provide the overall solution to the demand they're going to have for these products going forward.
Nonetheless,
and I think that we're in a good position to a portion of that solution.
Nonetheless, I suppose that ultimately what you're looking for from CEZ down the line is a guaranteed offtake agreement?
Well, we haven't got as far as having those discussions, but yes, that would make sense. I mean, if you look at it specifically from a European metals point of view, it would be good to be providing lithium carbonate and or hydroxide to 2 or 3 significant players in Europe. CEZ could be one, an automotive company could be another, and a pure battery manufacturer could be another as well.
Let's just talk a little bit about the financing now. From memory, it's a convertible bond. It's a relatively short tenor convertible bond. Can you just give us a few of the details about that convertible?
Certainly, it's 2 million euros, so it's not a lot of money. It has a maturity date at the end of December this year, and it converts to 2 million euros worth of stock in European metals, priced at the time that we began our discussions with CEZ, which was effectively in May. But it is simply an interim step for us, for the company, whilst CEZ complete their due diligence. Now, I don't believe it's going to take till the end of the year for CEZ to complete its due diligence, so I actually think we might see a resolution to this situation well before the end of the year, but we had to date it out to a certain date, and the end of December seemed like a reasonable position.
So if the whole convertible was converted into equity, how much of the company would CEZ then own?
At this point in time, just on the convertible, it wouldn't be a large amount. I think we might be capped today at about 35 to 40 million euros. So 2 million over 40 is, I think, 5%.
5% I make it. So they're great.
Yes.
So it's not a large shareholding in that sense that it's converting into.
No, but what we have announced in the RNS of earlier in the week is that CEZ would have the ability to convert that note as per the terms of that note, but also to commit to further funding in the company to bring themselves to a significant shareholding position. I don't think CEZ would be interested in being a 5% shareholder of European Metals. I think they'd like to be a much bigger shareholder or not a shareholder at all, but I'm punting on the former.
So when do you think we'll get a resolution to, there are a few balls in the air, if you like, in terms of the conversion, in terms of offtake agreements, so on and so forth. When do you think we'll be in a position, or investors will be in a position, to know the answers to some of these, I shouldn't say imponderable, some of these parameters and factors?
Well, it's really just, I think it's just a timing point of view. Obviously August in Europe, not a great deal happens. I would imagine that the due diligence would be completed in September, and we'd have some understanding of the way forward shortly after that.
Excellent. One final question, if I may. What do you think of the current lithium price, and what do you think a stable, conservative, long-term price is on which you should be basing your plans?
Certainly. Well, we've used $10,000 a tonne for carbonate in our forecasts, and $12,000 a tonne for lithium hydroxide in our forecast, obviously both battery grade materials. I saw an article put out by Edison earlier in the week that suggested that's well below the average that most lithium development companies are using in their studies. I think that's a good position to be. I think those are conservative numbers. The financials for our project on either of those two numbers are very, very strong. A 1.2 billion MPV and almost 29% IRR. So we're very happy to maintain those conservative, what I believe are conservative numbers. If you look at, for example, Benchmark Minerals, who I believe are the foremost commentator on this subject, at a conference they gave earlier this month that I was at, they suggested that last year there was about 180,000 tonnes LCE went into electric vehicles globally, and in 10 years' time that number would be about 1.8 million tonnes LCE. So they're predicting a tenfold increase in 10 years. That supply is not on anyone's forecast. It's not in existence as yet, which I think suggests that we're going to see firmer lithium prices for carbonate and hydroxide going forward, but certainly no lower than we're currently seeing.
All right. Keith, thank you very much. I'm afraid that's all we got time for today, but we wish you the very best of luck, and come back very soon and tell us how those initiatives are developing. That was Keith Coughlan there, the Managing Director of European Metals Holdings. As I say, I'm afraid that's all we've got time for, but join us for more such investment opportunities in the next few weeks, days, months, years, not necessarily in that order. This is me, Charlie Gibson, signing off for the Business News, brought to you by Blytheweigh. Until then, you have a very capital day.